Hello all, welcome to the SBI Securities Weekly Market Pulse, where we shall be discussing views on Nifty, Bank Nifty, key sectors, along with positioning of FIIs with respect to the open interest data. We shall also be discussing a bit on the rollover trends emerging from the monthly rollover analysis. On Friday, we saw Nifty as well as Bank Nifty rebounding from lower levels and ended with 1% gains apiece. Apart from that, action continued in small cap as well as mid cap space, where we saw both the indices scaling yet another all-time high. For Nifty, in the series gone by, we saw index closing 2% weaker with rollovers at 77% as against 84% of the previous month, and with a slight dip of 79% against the 3 months average. So if we see that there's this small dip, but after 5 consecutive positive closing, this is the first negative closing. So if we sum up the overall picture, I must say one thing, that it's not completely bearish. It's just that we have moved from a kind of over optimistic scenario to some kind of neutrality. While index is trading in a tight range, last many weeks we have seen Nifty trading in this tight range, but strong support zone is being formed around this 19,200 250 mark, where there is some kind of gap area that was left on 3rd July, whereas 50-day EMA is also placed at this zone. So this zone going forward will have significant importance, 19,200 250. Now resistance on the upside will be witnessed around 19,500 zone, where there is a downward sloping trend line resistance. So we feel that 19,500 initially could act as a resistance, but if this is crossed, if 19,500 crosses and we see some volume based action, then index on the upside could break its shackles and we could see a bigger move towards 19,700 750 on the upside. Key levels for the next few sessions, as we just discussed, could be 19,200 250 on the downside and 19,500 on the upside. If we see the derivatives data, major open interest built up is seen in 19,500 calls along with 19,600, as well as on the puts front, it is 19,300 and 19,400 strikes which have aggressive writing visible there. So this complements with the supports and resistance that we have discussed so far, 19,250 on the downside and 19,500 550 on the upside. Historically, if we see from a seasonality perspective, September month is the best known for being a trending month with high volatility. So on an average month on month, September series closes with a difference of 5 to 6% over the previous series. This could be positive as well as negative, with an intra-month volatility to the tune of 8 to 9%. Now this is this calculations have been spanned over a period of last 5 to 6 years since 2017. So by and large, we could expect some kind of a trending move in this September month in the next coming few weeks. Talking about volatility index, we've seen a 5% cool off in India VIX yesterday, which also aided the up move. If we see the data over the last few months, India VIX has been in a range of say between 9 and 12.5. Any move about 12.5 13 levels where there is 200 DMA placed could mean incremental volatility in the markets going forward. But till then, till the India VIX does not cross 12.5 levels or 13 levels, we could see index trading in this range with a lot of stock specific action and sector rotation visible. Coming to Bank Nifty index in the past series ended with a loss of 3.5%. However, this index too, although showing some kind of underperformance compared to Nifty, it is traded in a tight range between 43,600 and 44,900 levels for the past 16 trading sessions. If we just go a couple of months back, from mid-May to June end, Bank Nifty had witnessed similar kind of consolidation for a period of 30 to 35 days. Now, what is common between the current consolidation and the prior one is the support levels of 43,500 and 43,700. So during both the periods of consolidation, this zone of 43,500 and 43,700 has acted as a strong support. Indices have managed to hold these levels. So positionally, we feel 43,500 for the banking index would hold utmost significance. On the upside, now resistance will be witnessed at 44,800 followed by 45,200. For Bank Nifty to move from here on, we need to see a strong move in HDFC Bank and Kotak Bank, which has been trading in a range with a negative bias, and even ICICI Bank, which is not able to cross its important resistance on the upside. So all in all, 43,500 on the downside and important support 44,800 and 45,300 could act as a resistance on the upside. FII's data, if we go to see, FIIs have been net buyers in cash to the tune of around 500 crores yesterday, while DIIs have been net buyers to the tune of 2,300 crores. At the beginning of the fresh series, FII's long short ratio for index futures has rose to 50%. While if we see the data within the overall open interest participants, FIIs have been buyers in index futures, they have been buyers in stock futures, they have sold index calls and even sold index puts. But where the real action is that they have sold 3 times puts as compared to the index calls. So here there is slight tinge of bullishness going ahead with respect to the action seen in the first day of the series. Talking about sectors, if we see the rollover data of the recently concluded expiry, strong rollovers have taken place in auto, metals, IT and capital goods, while there has been improvement in rollovers in chemicals as well as real estate space. Speaking about metals, now this index is on the verge of a fresh breakout on the upside, and we could see the momentum expanding in this space. Now this is all because we have seen a dip in the dollar index from higher levels because of some weaker data from the United States. So metal index tends to benefit from the weak data as well as the weak dollar index, and hence we feel that the coming week also could see some kind of serious action in the metal names, which is very close to its all-time high. After a brief consolidation for the entire month of August, we saw yet another breakout in auto index at higher levels. So index for the entire month in August was consolidating in a tight range. The first day of the September series saw a breakout in this auto index, and we have seen some strong open interest build up on the long side in key names of the auto index. So in the coming week also we could see some kind of a decent action in these auto names. Few more spaces which were buzzing yesterday, where one of them was power sector. Now in the power sector, if we see a lot of momentum has been witnessed. Yesterday we saw Tata Power, we saw NTPC moving up, and a lot of momentum has been building up into these stocks. Along with that, even the CPSE space has seen some real good traction, and we feel that this move in the CPSE space could still continue going ahead in the coming week. Lot of stocks within the CPSE space have been witnessing fresh breakouts as per daily and weekly charts, and within the derivative space there has been a lot of rise in open interest on the long side within this space. So all in all, if we see CPSE, power, auto, metals, all these spaces have been buzzing, and a serious long build up is visible in these names. Another sector which deserves a mention here is the IT index. Now after being in a tight consolidation for a long period, now 4 or 5 months, we have seen IT index trading in this range and facing resistance at 31,600 on the upside. Once again this index has approached that levels, but this time the kind of internal moves, if we see within the IT space, a decent move has already come in the mid cap IT names, as well as what we are seeing now is that even the large cap names have started to participate in the rally. So we feel that the coming week could see large cap IT names moving, and the entire IT space could be in a decent kind of a scenario. Sectors which saw some kind of a dip in rollovers were pharma, oil and gas and FMCG, where we could see some kind of pressure at higher levels. So if we just see about oil and gas sector, non-performance of Reliance as well as oil marketing companies has led to weaker rollovers in this space. While in the last few months we have seen some phenomenal moves in pharma stocks, but this month we have seen some sideways action as well as a lot of profit booking from higher levels in a lot of pharma names. So we feel that this for the September month, this sector could trade sideways, and we should not be aggressively placed on the long side in this sector. Speaking about mid cap index, this index has made a bigger move, and we've seen a phenomenal 30% jump in the past 5 months. Once it broke out above 30,200 in early April, above its 20-day exponential moving average. Now, post that, this index has never breached its 20-day EMA, and it has kept on scaling new peaks every week on week, month on month. However, after such a big rally, despite the momentum being very strong, we should exercise a bit of caution and trail the positions with a trailing stop loss. So, from the index perspective, the 20-day exponential moving average currently at 38,400 will now be an important reference point. And in case we see the indices slipping below these levels, we should start getting a bit cautious. So that's all from my side. Hope you enjoyed listening to our podcast and found it useful for your trading decisions. Do tune in for more such market related weekly updates and insights next week. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.